Can Boss Energy provide life-changing returns? The purpose of this series is to find the next ExxonMobil. If uranium is set to become the new oil, meaning it's going to be powering the majority of Earth's energy needs, and obviously the assets that produce uranium are slated for exponential growth from here, right? We've been covering the fundamentals of uranium. Now we're covering the actual companies, right? ExxonMobil got here by acquiring assets like Mobil and other multi-billion dollar oil companies. Well, eventually there's going to be a massive mergers and acquisitions storm in the uranium space. We're already seeing Paladin start stacking acquisitions. What happens when a Deep Yellow merges with a Boss Energy, right? That's why it's important to stay on top of the fundamentals of these assets to see which ones could actually be taken over, which ones are deeply undervalued. Well, to start with Boss Energy, on the high level bird's eye view summary, Boss Energy is extremely positive, right? They are making 12 cents per share. It's a $2.58 stock, meaning their price to earnings ratio is 21.5. The fact that they're producing earnings and the fact that uranium is in a supply crunch and the fact that these guys have incredible assets, which we're going to cover, so far, very positive, very difficult for a mining company to go from being a developer to a producer. They're actually generating cash, right? Not that the same cannot be said for most of these mining companies. So what is up with Boss Energy? Well, this is their vision: 10-year mine life, 2.5 million pounds of uranium per year at $100 per pound. That's $250 million of revenue. That's assuming the spot price hovers around $100, which it most likely won't when you look at the multi-decade supply crunch on our hands. And then they have a 100 million pound exploration target. So that uranium right there could be worth tens of billions of dollars in the future. So when you look at assets that could potentially morph into the ExxonMobils of the world, this one has plenty of uranium in the ground. So we have the Honeymoon mine, which has 72 million pounds of uranium. And then we have their own mergers and acquisitions activity. They bought Ultimation mine. That's a joint venture with Encore Energy. And we have to dive into those assets. But this is a summary of what they've been up to. This is an example of how issuing stock isn't necessarily the end of the world, right? On March 2021, they did a $60 million capital raise. On March 2022, they did a $125 million capital raise. On January 2024, they acquired Alta Mesa. On April 2024, the Honeymoon mine started production. So they just started producing, and then Alta Mesa restarts production. So just right there, they became a cash cow. Let's dive deeper into the fundamentals of this asset. In addition to the Honeymoon mine, JORC resource of 71.6 million pounds, Honeymoon has a substantial exploration target of 58 million pounds to 190 million pounds at high grade. So they already have a 10-year plus mine life. This would expand that mine life if these exploration targets are met. And they've already managed to increase the lifespan of this mine from 16.57 million pounds of uranium to 72 million pounds of uranium, 4.3x, since the project was acquired in December 2015, right? So just a rock solid project. Then we have the Alta Mesa mine, which they own 30% of, which currently has 20 million total high grade pounds, plus exploration potential. They're saying 52 miles of stacked uranium roll front identified. So they have plenty of future cash flows with the mine they have, but then they're going to be growing those cash flows over time as they explore these very productive properties. So that's a summary of the project. What about the financials, right? All that's well and good. So far, you don't know enough to really value this company. Their balance sheet as of 6/30/2024, the most recent balance sheet, shows total assets of 539 million and shows total liabilities of 29 million. So they are so solvent. They have plenty of capital. They're definitely not going bankrupt anytime soon, and they're generating earnings, right? Current assets, these are the assets they can spend within a year. If they have to, they can liquidate their assets and spend these within a year. $133 million of liquid assets and total current liabilities of $13 million, right? So they're incredibly solvent, have so much cash, so much growth ahead. Obviously, very positive company based on that. So where do Wall Street analysts see this company going? Again, the professional researchers, the people that research this full time, these are their earning per share targets. They're saying 20 cents per share in 2025. They're saying 40 cents per share in 2026, and then they're saying 60 cents per share in 2027. That is exponential growth. So if currently the price of this mine is $2.58, if they were making 60 cents per share, and obviously these numbers are expected to grow as the uranium spot price increases in value, if they're making 60 cents per share, that's like a 4 price to earning ratio, extremely low. There's already future growth not exactly priced in yet. So this summary from Investing News kind of highlights exactly what is going on with this asset. We have annual production at Honeymoon is forecast to reach 2.5 million pounds. The Ultimation uranium mine commenced production on June 2024 with first sale of uranium expected in October 2024. Annual production at Alta Mesa is forecast to reach 1.5 million pounds. Boss owns 30%, so their share is 500,000 pounds per year. Almost zero risk of dilution with this asset, cash flow, earnings, enough to acquire more mines, enough to become the ExxonMobil of the future. Very, very high quality asset. Now, when it comes to looking at these mines, we have to look at kind of what you're getting for the price of the mine. The market cap of this asset is $1 billion, $1.1 billion. So if you're Jeff Bezos, you come in, you're like, I want to buy a high quality uranium mine. Well, I could buy Boss Energy for $1 billion. What am I getting for that? Well, if we look back at the balance sheet, you're getting net assets based on the balance sheet of $500 million right off the bat. And then you're paying another $500 million for future growth opportunities. So Wall Street analysts have the average price target at $4.81, right? That's like a double from where it is now based on its current fundamental analysis. This doesn't factor in future gains from exploration. It doesn't factor in a skyrocketing uranium spot price, and it doesn't factor in a mergers and acquisition premium as high quality players try to gobble up uranium in the ground. These guys already have plenty of uranium in the ground. They're finding more, and they're producing cash with it already. So just an extremely high quality mine.